what are they called? The rate.
Thanks so much to everyone who is joining the webinar on time. I'm just going to wait maybe 2 or so more minutes for the stragglers to join, and then we'll kick off. Okay, great. I think we can start now. Firstly, good morning, good afternoon, depending on what time zone you're in. Thanks so much for joining the webinar today. My name is Kate Reinhardt-Smith, and I'm a senior associate at Cenfri on our risk team. And this webinar forms part of a series of webinars that FSD Africa is hosting on the impact of COVID-19 on the insurance sector in Africa. This is the 4th webinar in the installment. The first webinar focused on digitization right immediately after COVID-19 hit. The second one focused on the longer-term sustainability of the insurance sector. And the third one centered around the results of a survey that we conducted in partnership with the Organization of Eastern and Southern African Insurers, to try to understand the impact of COVID-19 on the sector. As many of you know, for this webinar, we have partnered with both OESAI again, as well as the African Insurance Organization, the AIO. And this webinar will focus on digitization and insurtech in times of COVID-19, and is going to have a particular focus on 2 things in insurance that we think matter most, which is sales and claims. In this discussion, we'll consider how providers and insurtechs have gone about adapting their sales and claims processes in response to COVID-19, and we'll try to highlight the barriers that they faced along the way, and also the successes that they have witnessed. So I think just a few housekeeping points before I go ahead and introduce the panel. The chat function has been disabled, but please feel free to post questions in the Q&A section throughout. I'm going to try to pause after specific sections have been covered to cover a question or 2, and then I'm hoping that if I'm good enough at time management, that we'll also be able to have some questions at the end of this. So please do feel free to use the Q&A function. Lucia, I think if you can go to the next slide, I can go ahead and introduce the panelists quickly. So I'm very happy to have some great panelists on board and to have a mix of both insurers and insurtechs. The first panelist that we have on board is Sarab Shwama. He is the General Manager of Microinsurance at Britam, Kenya. We also have Jeremy Leach, who is the founder and CEO of Inclusivity Solutions, which is a insurtech, which is based in Cape Town, South Africa, but operates in Cote d'Ivoire, Kenya, and Rwanda. We're also joined by Richard Lefley, who is the CEO of Microinsure, which is another insurtech which has operations across sub-Saharan Africa and Asia. and he is the Executive Vice President of the newly formed microinsurance company, which we'll get him to talk about towards the end of this webinar. And then I'm also joined by Rashid Adebisi, who is the Chief Client Officer at AXA Mansard in Nigeria. And I think without further ado, I'm going to hand over to Lynette, who is the CEO and Secretary General of OESAI, just to say a few remarks. Lynette, you're on mute.
So hello, everyone. Thank you very much, Kate, for the introduction. I hope you're all keeping well together with your family and friends. And thank you for participating in today's webinar. My name is Lynette, as you've heard, the Secretary General of the Organization of Eastern and Southern Africa. So today's webinar is the second in a three-part series OESAI has gotten involved in partnership with Cenfri and FSD Africa. The discussion started at the back end of a survey that we conducted a few months ago on the effects of COVID on the insurance sector in the region. The aim of this webinar is to make some lemonade out of the lemons that COVID will continue to throw at us globally and of course as an industry, and how in the face of this adversity we can now, rethink how we can do insurance a bit differently. So today, as we explore the topic on digitization and insurtech in times of COVID, I hope you can all hear some practical lessons from the panelists on how we can digitize our operations end to end, and especially the claims processes. I believe there's some good traction that has been made on the onboarding process and in the administration of insurance and the servicing. So on behalf of OESAI, I would like to sincerely thank you and the team of expert contributors that we have with us today. And as a representative of the Organization of East Africa, Eastern and Southern Africa Insurance, we are mandated to drive the development of the insurance sector in the region. So I must applaud FSD and Cenfri for their continuous efforts, in the commitment they are putting in inspiring a common strategies towards the development of the sector. I hope you can continue to engage even further in the coming days, even as we advance our industry. And at this point, I think I'll hand over back to Kate to continue with the discussions.
Thanks so much, Lynette. Lucia, if you don't mind going to the next slide, please. So what we've done for this webinar is we've broken it up into two distinct sections. So the first section will focus on sales, and the second section will focus on claims. And in each of the sections, I will present a few slides from the survey that we did in collaboration with OESAI, which is a sample of 68 different insurance actors across 19 different markets. We rolled out this survey in June to try to understand how sales have been impacted by COVID-19, the extent to which they have been digitized, and then what is practically needed from both a regulatory and insurer perspective in order to switch to remote sales. And then after I've presented these few slides, I'll move to a discussion with the panelists and try to get to some of the nitty-gritty things like around how insurtech and insurer interactions have changed as a result of COVID-19, and also how insurers have fared in shifting consumer behavior to purchase insurance digitally. So if you go to the next slide, Lucia. Okay, so I'm gonna go quite quickly over these slides because I want to save enough time for discussion. And we'll be sure to share this presentation afterwards. But what this slide is illustrating is just the impact of COVID-19 on the ability of insurers to conduct sales. I think it's of no surprise to everyone on this webinar that many sales in sub-Saharan Africa are still quite traditional in the fact that they're being done through brokers, agents, and direct sales, all of which require face-to-face and physical interaction. So it's kind of no surprise that COVID-19 has had quite negative impacts on the ability of insurers to be able to conduct sales the way that they typically do, which requires physical interaction. And as you can see, almost about 70% of the respondents have faced a reduction in new sales from the period of March to June 2020. Next slide, please, Lucia. This slide, so on the left-hand side, you can see the extent of digitization of both sales of new policy and of issuing policy documents prior to COVID-19 And on the right-hand side, it illustrates how insurers have digitized as a result of COVID-19. And I think that the main point that I want to make here is that on the sale of new policies, only about 20% of insurers that we sampled were already conducting sales digitally prior to COVID-19 happening. However, if you looked on the right-hand side, a large percentage of these are actually in the process of digitizing sales. So I think it's fair to make the point that COVID-19 has accelerated insurers' prioritization of concluding and conducting sales remotely. Lucia, next slide. So taking a step back, what do insurers need to be able to do in order to conduct remote sales? And we've tried to break this down to 3 distinct steps. The first is digital contracting. So is there a Transactions Communications Act which allows for e-signatures in the country? So is that legally allowed is the first part, the ability to contract digitally. Secondly, in this component, does the insurance regulator acknowledge and recognize the fact that e-signatures are legally allowed and can be used to conclude the sale of insurance contracts? And then is the industry aware of this? And oftentimes we find that they actually aren't, and that can be quite a big barrier to conducting sales remotely, which I'll speak about a bit later. And then the fourth question in that kind of first step bucket is, do insurers actually have the systems and internal systems in place in order to be able to conclude sales digitally with electronic signatures? If you move on to step 2, this is really about the fact that in order to conclude sales, insurers need to collect specific customer due diligence and KYC documents in order to identify and verify that they are the individual who they claim that they are. This is typically often done physically in person. However, it is possible to do this remotely, and it does require kind of a few steps to take place, which is, can the insurer collect identification information electronically? So this could be things like their name, their fingerprint, their ID number, or their picture. Secondly, are they able to verify this information, their identity information, against a database? And this can be a database which is either a public database or a private database. So does that exist? And thirdly, they need to be able to assess the level of the identity of assurance. So do they think these things match? Is this person who they say they are? And only if these things happen are they able to conclude do the remote onboarding. And this also requires them to have systems in place which enable this. And then of course, the third step is, are consumers able and willing to engage digitally? So this is around things like, do they have the right identification? Is the process simple for them to sign up? I mean, it's all great to have the e-signature and the ability to do remote onboarding, but if the process is so complicated that an individual isn't able to actually go through it, then the digital sales aren't going to just magically happen. So it's really important to have that third step as well. Lucia, if you go to the next slide. So we did try to get to the bottom of this in the survey that we conducted with OESAI's members. And on the left-hand side, it just illustrates whether institutions currently use e-signatures to conclude the sale of contracts. And on the right-hand side, it's really about whether they're able to conduct remote CDD onboarding remotely. I think 2 trends kind of hold on both of them. For e-signatures, you can see that insurtechs are, although the sample is small, insurtechs are much more likely to use e-signatures than micro-insurers and insurers. And when you look at why why the industry isn't using electronic signatures, it really boils down to the fact that they either lack the internal systems or they're uncertain about whether regulation actually allows for this, or they actually think that it doesn't allow for this. And this is a very similar picture that you see when you look at CDD, as well as the reasons why people aren't doing it, along with the fact that there aren't public or private databases in order to verify individuals' identification. So I realize I just gave you quite a bit of information at once, but I actually want to turn to the panelists now. So my first question is to you, Jeremy. In your previous role at Hollard and currently at Inclusivity Solutions, you've gained a lot of insight into how insurers and insurtechs think and act. As you can see from the data, only about 39% of insurers in the survey are using electronic signatures, and about 48% of them are doing remote CDD onboarding. These numbers are substantially lower for insurers than they are for insurtechs and microinsurers. Why do you think this is? We have the typical webinar problem. You're on mute.
Apologies. It's a typical one. So first, regards to the audience, and apologies for my COVID lockdown haircut, which is a little bit out of control, as you can see. But thanks, Kate. It's a great question. So if we look at it, I think there is a couple of things to look at. One is the regional differences as well, which I think you're also kind of alluding to in terms of the view of the kind of regulators and the philosophy of the companies kind of around that. There is quite big regional differences. So even where it's enabled, people still have a preference from a hard copy. Recently in West Africa, to get an invoice kind of paid, the invoice has to be submitted physically with a stamp and two signatures on it, you know, in this time of COVID. And obviously in South Africa, we only even use stamps. So again, it's pretty alien to what you're seeing in kind of the Southern African space. So I think there is that kind of aspect. Secondly, in terms of what you pointed out around regulations, in one market, the regulator told us directly, we're trying to encourage digital sales and e-signatures and such like. And it's actually in the case of the partner, a bank, they're saying, no, it's too risky, too uncertain. And basically their risk appetite wasn't sufficient to be able to move that model. And it took, I think, 6 to 9 months to get them to move along after a signature from the insurer to saying, yes, we are comfortable with more of a digital kind of sales model. So again, it's big aspects, as you say, mismatch between the regulations and attitudes. In terms of differences between insurers and insurtechs, well, I mean, I think it's somewhat arguing with that. The insurtechs and microinsurers are typically newer player kind of companies. They have newer systems. It's not legacy kind of systems. You know, the whole point of them is to be open to new thinking and kind of flexible and agile. So essentially that creates an openness to kind of innovation and testing new models. I mean, insurers, again, typical story, that's slow to move. You know, the old legacy systems that I remember in one case, one insurer said to just integrate between platforms basically would cost the same amount it cost us to build our platform in the first place. So again, being able to make changes is cumbersome, expensive. Decision-making is challenging because you may have 12 committees plus Exco plus board to make a decision around a new kind of model. And the dreaded project management office, which is trying to, using shared services, and they're trying to manage projects across the kind of the business. And it just gets blocked at that point for long periods of time. So again, there's this whole kind of aspect in terms of the big insurers of culture, of kind of challenging kind of systems, and basically kind of concern around risk and taking on kind of new risk models. And I think that somewhat explains some of the differences between both the regional aspects and certainly also between the entities.
Thanks, Jeremy. I think you make some really good points there, and I'll later follow up with Saurav from Britam to get his opinion as well on some of the things you said. But I think for now, I'm going to move over to Richard. So Richard, over the course of microinsurance history, it has partnered with aggregators like telcos and digital platforms in Ghana, Tanzania, Kenya, and obviously the other jurisdictions in which you operate, to offer low-cost insurance solution to individuals. Practically, how have these partnerships enabled you to sell products digitally? And was it easy to convince traditional insurers to move towards conducting these digital sales? And as Jeremy said earlier, the risk appetite isn't always there. And then lastly, it'd be great if you could reflect on whether you ran into any regulatory challenges in this regard.
You just chucked in that extra one at the end. Okay, so I think digital channels like like for example mobile phone companies, as you mentioned, are really at the core of the success that companies like Microinsure, Inclusivity, Bima, other organizations, other insurtechs that have been very active in Africa. And the reason for this is because microinsurance or insurance for the mass market is really one of a distribution challenge. It's about it's not a product-led issue. This is about how do we distribute to large numbers of people, and that is really the key issue that we have to crack. And what telcos and these other digital platforms give to us is two things. One is that they give us their brand, which is trusted by their target market. And the other one is they enable payments. They enable the collection both of premiums, but also of claims going out. So people trust their telcos because they use them frequently, right? So most customers are pay as you go. When they buy small amounts to top up their phone, that it kind of enforces in their brains that if I buy airtime from MTN or Vodafone or whoever, or Airtel or whoever it is that they work with, that when they buy that, it just works, and they do it very frequently. And as a result, when that organization says, you know, if you get sick, if you die, if you if you have an accident, then we'll pay you this money, it doesn't even cross their mind that this won't happen, right? So they fundamentally trust these brands, and when these brands say, do you want protection from these risks, they believe that it will work. And the second thing is that what we found is that when you're dealing in a market where 97% of people don't have insurance, we're not actually competing. I'm not competing with Rashid at AXA. I'm competing with apathy, right? I'm competing with, I don't have insurance and I can't be bothered to sign up for insurance. That's the issue. And so we have to reduce the friction involved of signing up, of finding out about the insurance, and most importantly, about paying for the insurance. And any friction that there is in that customer journey, it's so easy for people just to say, oh, you know what, I can't be bothered to complete the process. I won't sign up today, I'll do it tomorrow. And then of course they never do. Interestingly, during this period of COVID, we've been selling insurance both through call centers and also digitally through kind of SMS blasts. And it's been really interesting to watch the kind of take up of COVID as COVID's hit, and as it's hit the media and in people's lives. We've seen a kind of 40% increase in productivity and sales of each of the agents that we use. So each of the agents is making 40% increase in sales every day. But more interestingly, there's been an 8-fold increase in digital signups. So when we send out an SMS blast, eight times more people have responded and actually said, yes, I'd like to buy the insurance, and sent back an SMS and signed up. Interestingly, it's also had an effect though on collections. So as COVID ticked through, initially there was no effect on premium collections. Collections stayed stable. And then as people went into lockdown and they weren't working and they didn't have money, we saw about 1/3 of a reduction in collection success. So people just didn't have any airtime. We were trying to collect airtime. We do daily airtime collections from their airtime account, like ringtone business. And we found that COVID had a big effect on that. Okay, so we could talk more about that if that's of interest to people. In terms of insurers, I mean, frankly, and Rashid probably the exception, and maybe Britam as well. But I mean, I think traditional insurers are really quite backward in some ways. I mean, they've been around for decades, and yet 97% of the population doesn't have insurance. So that statistic tells you that just more insurance companies isn't going to lead us to people magically suddenly getting insurance. And I think there is real, I mean, my biggest concern with working with the traditional insurance companies has been trying to convince them to remove friction from the customer journey. So I'll give you a very real example. And I think the examples that you gave earlier, Kate, are very real about, digital contracting and all the rest of it. But we had one issue where we noticed that we were asking people 3 questions. How old are you? What's your name, what's your age, and what's your next of kin? And we were losing 80% of clients by just asking them those 3 questions. And we started to ask ourselves, why do we need to know their age? If we have 1 million people, then they're going to be the average age, which is about 25 to 30 years old in sub-Saharan Africa. So why don't we just get rid of this age question? Because if we get 1 million clients, then of course there's going to be some people that are 90, but the majority will be 25 or 30 years old. And what we realized was people didn't know how old they were, right? So they didn't actually know. And so they thought, well, if they're asking me how old I am, I don't have proof, I don't have a birth certificate, so maybe they'll decline my claim when it comes time to claim. And so they couldn't be bothered to finish up the signing up process. And when we got rid of that age question, we actually saw a massive increase in signups. So we signed up in 120 days, we signed up 30 million customers in one telco. Okay, that was in India, not in Africa, but the case still holds true. From a regulatory standpoint, I think it's been mostly around this kind of idea of how do we remove friction from the customer journeys. So removing things like age, removing wet signatures, being able to use airtime as a way of collecting premiums. So anything that removes friction. And in Nigeria, Rashida may well agree with me. There seems to just be a massive amount of friction which is in the customer journey as a result of the regulations. And it's really, really hard. She was teasing me earlier for why did I run away from Nigeria? And the truth is because one, AXA is better than us. And the second reason is that the regulatory environment is just too tough, right? It's just too tough to sell insurance. So there have been big improvements on this in sub-Saharan Africa, but there are definitely some countries that are struggling.
Thanks so much, Richard. And I'm really glad you touched on kind of the third step that we had in terms of, you know, making sure the customer journey is seamless for people, because just putting insurance online is not enough. And I really like that example that you had about just removing the age, increase your uptake significantly. I think I'm going to move on to Sarb now. So Sarb, thinking about what Jeremy and Richard said earlier, particularly Jeremy with the risk preference of the bank that he was working with, is there actually a risk difference between electronic documents being submitted for KYC and CDD purposes versus hard copies being submitted? I'm wondering how much of the digital contracting and remote onboarding issue is firstly a regulatory one, or is it an insurer system one, or is it really a compliance and mindset shift change that needs to be happening to kind of move away from the traditional way of doing things physically to actually doing it remotely?
Thank you, Kate, and hi to all the participants. Already we have had some great inputs. And thank you for that question, Kate. I think I'll have to agree with Jeremy that I think it's more of a mindset, culture and systems issue rather than, I would say, a regulatory issue. I'll give example of Kenya. I think a very simple example that in Kenya, the government has made the national population register available to any private enterprises, and just through a simple API integration, you can collect a national ID from a customer and verify it through the national population register. So what it means is that it can make the customer journey really, really simple, because all you need from the customer is the national ID number. You really don't need any hard copies. However, this is where the mindset and the commitment bit comes in, because the insurer needs to have made that investment or have had to have that setup that can actually, enable and make use of such infrastructure. So it's really around that system and mindset issue. I think similarly, we are talking about digital signature. I think in Kenya, what we have managed to do in some of our digital products is that I think what signatures really speak to our customer consent. And if you are able to collect and store customers' consent in a digital way, you don't really need e-signature. So I mean, ways like, simple SMSs or a USSD customer journey where a customer can actually say, yes, that I do want this product. I think that just simplifies, and that simplifies even the need of collecting an e-signature. So really from that angle, I see more of it as a mindset and a system issue, at least from Kenyan experience, where regulator has been supportive of such initiatives. And I think in some of our other cases where we are working with certain partners, particularly financial institutions who already collect KYC for their customers. So we strongly believe that there is no need for insurers to ask for that KYC information again, because you can just consume the KYC information that already exists. So all you need is a customer consent, which can be obtained digitally, like I was saying. So to sum up, I think it's really around mindset needed to make that change and to make that investment to enable digital onboarding is really the key. I think your second question was around risk. At least from Britain's perspective, what we see is the risk of these documents lies more from claim side and not as much from the onboarding side. I think Richard was saying earlier that microinsurance is really about distribution and reaching thousands of customers. So we strongly believe that I think what we should try to do is make the onboarding journey much easier, so that because thousands of people are onboarding, but only a small proportion of them are going to claim. So instead of making it difficult for all those people to onboard, you can actually try to strengthen your claims process. And that's how we look at it. That I mean, if we are really looking from a risk perspective, I don't think electronic documents pose as strong a risk in terms of onboarding. Thank you, Kate.
Thanks so much, Saurabh. I think you did a great job of speaking to those points and highlighting how it's more of a mindset shift that needs to happen as opposed to barriers in terms of internal systems and regulation, which is quite interesting. Moving on to Rashidat. We discussed earlier what is required to switch from remote sales and remote onboarding of customers. I'd like to get your perspective on how effective remote sales have been in Nigeria. And I think Richard was speaking to the hard environment in Nigeria a bit earlier. But have you been able to get customers to change their behavior and purchase insurance online? And what do you think insurers should consider when making the decision to sell remotely?
Thank you very much, Kate. And, you know, it's quite an interesting question. Unfortunately, we don't have enough time to overanalyze this, especially in the Nigerian case, right? I think Richard, you know, inferred towards it earlier. There might be a few regulatory issues, but then we can survive even within the regulatory challenges. And that's what we're all having to do here. So if I go back to, you know, what Saurabh said, it's really about investing, right? And it's investing in the technology. So for someone like us in AXA, we had actually started a digital journey 3 years ago. So we tried to improve, got it online, but putting things online doesn't mean it will sell. There are a lot of activities that you need to rethink. If you think about questions that you need to ask, but you still need to work within regulation. So how do you find the fine balance? So I feel strongly that this is where the challenge has been. So for us, we've been able to move more clients online, but you'll see it's a bit more successful in certain type of products, the simple products. So with travel insurance, for example, we were able to move travel and grow it to about 33 or 35% of our travel policies were being sold strictly online. They didn't speak to anyone, right? So for things that are investment-based, where clients would like to check their balance and they want to be sure that it's there, you know, you are able to see some growth and improvement, and clients are actually catching up and accepting remote, you know, sort of like online transactions and remote relationships in this instance. But unfortunately, people in Nigeria are still quite physical. When it's more complex, when it's a life-related solution, they still need somebody to talk through it with them. They want to check. They're not sure. They want to understand the options. Part of it is our problem, really, right? If the products are simple, if they're more intuitive, then perhaps people didn't need to do that. But where we also still have people being challenged from a technology perspective in terms of data, you need to ensure that the solutions that you have, you know, are light enough depending on the bandwidth, right? So we experience these sort of challenges. So we have seen more clients go online. We have been able to, you know, during the lockdown, for example, we saw growth in third-party motor, simple, no complexity, but we also saw dips, right, around, you know, the comprehensive motor, because people wanted to pay, perhaps they were buying more of the installmental options rather than the full 1-year payments. And you would see that it really depends on what exactly you are offering. So creating, you know, much more low bucket, low priced, you know, value adding, simple products will definitely give us a bit more traction. But we had identified that, you know, we still needed to have the physical interaction. So we have a program we've been working on in AXA. It's more of a phygital. This is using the digital to enhance the physical sales of our agents, because they are still able to engage. But how do we empower them with the right tools? How do we make sure that in a low-touch environment they can survive and they can still make a living? So this was a project we were on before the lockdown started, and we've started launching a few of the solutions. And it's not as easy as one would think, because you're still trying to work within regulations. We need to fill 16 lines of a proposal form? How do you get a client to fill 16 lines online? You know, how do you make this happen? If we could use things like the BVN, the bank verification number in Nigeria, for example, that would make a big difference for us. So this sort of digital validation of KYC and CDD is something very important. But when you look at motor insurance, for example, for comprehensive, when you need to inspect a car, because we don't have a very strong DMV, you know, system where you can validate that the car exists. So this is where the fraud and the issues come from. So for us, we definitely are clear that, you know, digital and remote is extremely important. We are seeing uptakes, depends on the generation that you're actually targeting as well, to be fair. But I think for any insurer, you know, the question comes back to what do you need to think about? You need to be a bit simpler. So we run a simplification project, working on our policy terms and conditions and engagements. So this is for the traditional sort of policies we have. But we've also been working, worked in the past with Richard. We're very engaged around the inclusion side. And here, you know, we're able to do some really exciting things. And we hope that as we grow in that area, we can sort of apply those skill sets into the core traditional area. But the real challenging one in Nigeria, I would say, is the commercial side, right? The corporate transactions. The brokers still want you to feel asleep, company by company. And they don't just want you to feel it, they need a special stamp, because NICOM has specific people who must sign for you, right? They need to be of a certain sort of category. So how do you create this in this environment and get them to accept this? So even when the insurers are happy, the people along the value chain and the regulation also need to support you to make that successful. So I guess this is where we really are.
Yeah, no, I think those are some fantastic points. Thanks so much. I'm just, first of all, I want to thank the audience. You guys have been super engaged with the question function. And I see that Richard has already been answering some of the questions, so thank you very much. But I actually think that we'll take a few of the questions now. And one relates quite well to the points that you were making right now, Rashida, around agents. And the question is really around, so as insurers' sales become more digital, how will this change the relationship between insurers and agents? And what are the challenges that you guys have faced in the capacity development of agents and sellers? So it'd be great if one of you guys wanted to touch on that, maybe Rashida, and then Sarab, if you have thoughts on this.
Thanks, if you don't mind me starting. Really, I think in Nigeria locally, what we've seen is that sometimes agents have been not treated as, you know, the sort of important people they are. And that's why we end up, you know, mis-selling and passing across the wrong message. And it's really just a transaction for them. So moving our agents, you know, to let them understand that this is really a noble profession and they can make a living and help people. I think this is the journey that we all have to be on. And they can be very physical, they can be digital. It really depends on what their skill sets are, who their target markets are, where their strengths are. So one of the things we've had to be doing is to go through a retraining process to really empower our guys to do a lot more, teach them a lot more, because sometimes we just want them onboarded and selling pretty quickly. So how do you take them through this journey? Some of them are not as educated and they are able to actually penetrate specific markets. So how do you still engage them as well? So creating, you know, trainings and interventions that could be, you know, seen in a video or in not just a physical class, in small bite size has actually been quite useful. But it's still a long process for us because we still need to work with, you know, some of, you know, regulatory points around who you call an agent and whether they can sell or not, and are they certified as well. So, but what we have seen clearly is that empowering the agents with digital tools, making the sale process extremely simple and engaging can actually make a big difference. You know, so we run a program where we trained a few guys with our new process, and we give them, you know, 10 leads out of the leads that some other people have worked on. These guys each converted 7 out of those 10 leads. Each of them. Ordinarily, you know, some other people had worked with these 10 leads and they didn't get any traction at all. And it was based on a new approach, a new engagement. And it's from a value position, not just from a selling a product perspective. So it goes back to saying that people perhaps are still not aware, they still don't get it, you know, and we need to listen to them, understand what their real needs are, and then, you know, be able to offer solutions that addresses their needs. We've seen that, you know, work quite well. And there is that possibility because here people still want an address. If you tell someone in Nigeria that we're a digital company 100%, if I'm upset, where do I go? No place. If I need to complain, where do I go? This is low trust. Even the telcos have lots and lots of centers. And the question is, can we collaborate? Can we co-locate? So these are the sort of options that I think work. So I'll leave the floor for Sarah.
Perfect. Thanks so much. Sarah, do you have anything to add?
Thanks, Kate. And I think Rashida made some excellent point, which relates to the earlier question you asked me about digitization. And I think a lot of time we blame insurance companies a lot, but I think it's about the entire value chain. I think it's not just about insurance companies. Let's say if I talk about Kenya, 92% of Kenya's insurance premium revenue last year came through intermediaries. So either brokers or agents. So that means that unless you are able to digitize that value chain, you are not going to make a significant difference. And at Britam, we strongly believe that there is a strong role for agents to play within the insurance value chain. I mean, there are more than 10,000 agents, insurance agents in Kenya. And they play, I mean, clearly it's a big employment source, as well as they play a big role in the insurance value chain. And especially for certain types of insurance, such as business insurance for corporates or SMEs, I feel that intermediaries will continue to play a very strong role. So what we have been trying to do at Britam is to make it easier for our agents to sell insurance. And what we did was we designed an agent portal where we actually were able to digitize and transfer some of the insurance processes to our agents. So using this agent portal, our agents can generate quotations for life and even some of our micro insurance products. They can share these quotations, they can share the marketing material, and finally they can also collect customers' information using this portal. And we believe that these tools will really enable agents to be digitized and help in digitizing the overall value chain.
Thanks so much, Saurabh. That's really useful. I think we have one last question from the audience that we can answer now, and I'm going to throw it at Jeremy and give you maybe a 1-minute time limit if you can, just so we can get to the next section. But have you seen that customers are more willing to trust digital platforms and not brand name insurers?
When you say brand name insurance, you mean brand name as in distribution partners?
Yes.
So I missed that question.
Yes, I believe.
Yeah, I think there is. Yeah, so I mean, I think there. I mean, certainly if you've been using for big brands or banks and M&Os, I do think there are a number of new brands, new platforms kind of coming up in those markets, which are providing a good quality service in the market. Many of them are still early stage in Africa, so the scale is not necessarily there, but hopefully we'll see the same kind of escalation of numbers as we're seeing in other markets in Asia, for example. And certainly I think then there's a good fit by a useful product and a useful service where you can link insurance, either embedded or bundle it or even kind of voluntary. But yes, I think there's certainly an opportunity with these new platforms to link insurance with them. Just need to get the right product and the right fit.
Okay, perfect. Thanks so much, Jeremy. Lisha, if you go to the next slide, please. So this section is going to focus on claims. So I think as we have heard from the participants previously, digital sales have had many challenges, but they've also seen some successes. Claims can sometimes be an overlooked aspect in the insurance development discussions, but are really key to ensuring that providers provide value to customers and that trust is retained. So in this section, I'm going to quickly speak through some of the findings from the survey and then turn to the panelists to see how claims have been impacted by COVID-19. So if you can go to the next slide, Lisha. So this slide just illustrates the impact of COVID-19 on claims. It's a quite different picture than sales. As you can see, some insurers have experienced decreased claims, and this can be for multiple reasons. I mean, in some instances where there were strict lockdown measures, people weren't actually allowed to drive. So the risk, the likelihood of getting in a motor accident decreased significantly. And we've heard from some insurers in South Africa, which had very strict lockdown measures, that this was the first time ever that they've made a profit on their motor line because of this risk occurrence reducing. And then also that not such a positive story is that some countries have had a really hard time processing and making claims remotely. So in Rwanda, for instance, insurers are able to process claims remotely, but they actually aren't, they don't have the systems in place to make a claim remotely. So to make the actual payment. So in the beginning of lockdown, they were not allowed to venture to the office to pay claims. So a lot of claims actually took quite a bit of time to be paid, and they actually had to engage the insurance regulator, the BNR, in Rwanda in order to be allowed to go to the office to make these claims payments. And then they've also decreased for reasons like people not wanting to go to the hospital like usual, really only going for very specific reasons like thinking that they could have COVID. In other instances, they have increased. This can be for reasons that some non-life insurers have had to pay out business continuity claims, which have been quite substantial. But the point that I want to make here is that it's a little bit of a mixed picture when you look at claims and the impact of COVID-19. Next slide, Lucia. So this is a similar slide to the one that I presented before on sales. The main point that I want to make here is that it seems like it's been a lot more feasible for insurers to digitize the claims aspect prior to COVID-19 and even directly as a result of COVID-19. Which is, it seems like it's been easier than the sales process. If you see 35% were already processing claims before COVID-19 remotely and 38% paying claims remotely before COVID-19. And then 21% and 16% have been able to do these functions in the time period between March and June 2020. So it seems like it's been a bit of an easier process than the sales process. But I think at this stage, I'm going to turn to Richard. So Richard, Microinsure has a partnership with One Acre Fund in Kenya to provide life and health insurance to many farmers and families. Can you talk us through how you did claims processing prior to COVID-19 and how you've had to evolve this approach after containment and lockdown measures in Kenya hit? And it would be great to hear if, you know, making this change came with any challenges or concerns, and if so, how you overcame them.
Sure, thank you. Yeah, we insure about 800,000 lives, about 400,000 farmers plus their spouses for life and hospitalization in Kenya. We also work with One Acre Fund across many other countries, but Kenya is by far the largest. I think kind of prior to COVID, this was a very frustrating process. So it was primarily a kind of paper-based process. The client had to fill out a piece of paper, get a proof that they were hospitalized or a death certificate, kind of submit that back to us through the loan officers, you know, back through the channels. It took days or weeks for us to get this paper from the field back to Nairobi. It took an inordinate amount of time for the insurance companies in Kenya to agree. We tried different insurance companies, found all of them to be kind of really quite sleepy in terms of agreeing to pay claims. And then it took even, you know, it took quite a long time to then kind of get the money back to the client. I think, you know, we started to track it, and we worked out that for Microinsure, it was taking us about 2.5 days to do all the things that we needed to do. But the whole process was taking somewhere between 60 to 90 days. This was far, far too long. You know, it was just taking an incredibly long period of time. And there was a huge amount of resistance from the insurance companies to try and fix this. We tried over the course of about a year, different approaches, different things that we could try and change within the claims process. And then along came COVID, and it's been brilliant, really, because what we've been able to do is get everyone to agree that we can actually, instead of needing a piece of paper, we can just get a picture of it sent to us through WhatsApp. So what used to take days or weeks for paper to get from the rural areas into the capital now happens instantly over WhatsApp. We also got the insurance companies to agree that they would set up an escrow account. So they parked the premiums in an escrow account, and they gave us permission. We became a claim settlement agent, and they gave us permission to authorize the claims and get them paid. and we were able to get the M-Pesa numbers for all of the clients, so that when they need a claim paid, we don't need to kind of verify how they want to get it paid. We just pay it to their M-Pesa account. And as you know, everyone knows, in Kenya, everyone's got an M-Pesa account. And now the claims payments are taking on average 3 days. So from the date of death to the date the claim is, the money's actually with the client, is 3 days. So we took it from 60 to 90 days to 3 days. So in some ways, COVID has been like a real blessing. And I really hope that once we get back to life as normal, that we can keep this way of working.
Thanks so much, Richard. That's incredible, actually, the amount of time you reduced it to. And yeah, it'll be interesting to see how, when COVID is no longer a factor, if this stays in place. I'm really hoping so. Rashida, actually, Saurabh, my next question is to you. Can you talk us through how Britam Kenya has worked to digitize aspects of the claims processing and payment for your health microinsurance product? And what the impacts of this digitization have been?
Thanks, Kate. And I think Britam was definitely one of the insurers who were in process, or we had already digitized our claim process before COVID. And I think that goes to that we manage our health microinsurance business in a very unique way. I think a lot of health microinsurance products currently work on a reimbursement model where the customer after discharge makes a claim. And we realized that the real customer value was to provide support when they need it the most. That is at the time when they are in the hospital instead of a reimbursement model. So we went through a very painful process of impaneling almost 400 plus hospitals in Kenya. And these hospitals include mission hospitals, private hospitals, government hospitals. And a lot of these hospitals have traditionally not worked with the insurance because insurers mainly work with urban hospitals to serve a higher income kind of customer segment. But for health microinsurance, no one had really engaged these hospitals. So we went through that painful process. And then we realized that the entire claims process was really, really slow because a lot of these hospitals were, not able to submit documents on time. So there were payment delays from our side. I think we were paying these hospitals between 50 to 60 days. And that was really affecting even our customer experience because the hospital would be like, oh, Britam is not paying us, so you can wait. I can treat these cash customers first. So again, this goes back to the commitment that I was talking to earlier. And we decided to categorize these hospitals into two categories. First were more urban hospitals like in Nairobi, who were more digital ready. And the second were what I would say analog type hospitals like the mission and the government hospitals. So for the first categories, we designed a hospital portal on the similar platform that I was speaking to earlier, the agent portal. So these hospitals can use this portal to validate clients and to submit claims. And then they can also track if the claims have been paid or not. So we are right now live in, I think, 94 plus hospitals in the urban areas of Kenya using that portal. For the analog hospitals now, which was still sending us paper-based claims, we decided to adopt this process, which has a very technical name, Robotic Process Automation, but really is fairly simple. It uses software bots where the paper claims that have been scanned. So these bots pick this data from these scanned documents into our core systems. And using these two technologies, we were actually, in the first half of this year, we have been able to digitize 92% of our all hospital claims. So what it has meant is that during COVID, we have been able to maintain the same claims turnaround time. But obviously, it also speaks to a very different way of managing our health microinsurance business.
Thanks so much, Saurabh. Really, really great to hear. Rashidat, I'm aware that AXA Mansard has an online portal where customers can submit claims documents. Are you finding that your customers are making use of this portal? If not, why do you think this is? And have you had more challenges with fraud on this online portal than you would if you were for instance, getting them to submit physical documents in person. And if I can just kindly ask you to maybe keep it to a minute or two, because I realize I've been a bad timekeeper and we're almost out of time.
No, I mean, we've seen, it depends. You know, we have the health side of our business, and then we have the P&C and the life side. So on the P&C side, we've seen a lot more people using the platforms to lodge their claims. But at the same time, you know, we still have verification issues in the country, right? So we still have, you know, fraudulent cases happening, people creating pictures. And what we have been working on are technologies that can help us validate, you know, locations, very simplified advanced level solutions, but similar to a WhatsApp, but doing a little bit more with more security and data protection. So we see that working quite well for the P&C side. But on the health side, we've actually seen, you know, amazing growth in that area this year with a lot more of our hospitals, you know, validating both online and using the USSD.
Thanks so much. And that brings me to a question for you, Jeremy. As claims processing does move to becoming more digital, do you think insurers should be worried about fraudulent claims? And how can insurers and insurtechs maintain this balance between making claims processing seamless for customers, ensuring that turnaround times are quick, but also balancing the risk of fraud? Do you have any thoughts on this?
Thanks. That's a good question. I mean, I think fraud is always an issue in the insurance industry, but it really comes down to, I think as Richard mentioned earlier, the law of large numbers. If you have large numbers, then fraud will decline as a percentage of that. So it is around scale. And I remember an old chief operating officer of mine at Hollard would say that, you know, the traditional insurance is designed around the fact that they believe that everybody is a crook. Where actually, if you look at how it should be, is that every majority of people are honest people, and it's only the minority who are likely to commit fraud. So again, that's why the focus on simplification and basically making it easy for people to sign up. And then you watch the data and you tighten up as required. So again, that's what's critical. You've got to be on top of the data. You've got to have some kind of flags that you can monitor when there's likely fraud coming through, and then you can act on that. So I think that is kind of the critical kind of aspect. Keep good data, give traffic good data, analyze it, and then respond kind of as required. I think there is a broader challenge around the industry as well. I mean, there's resistance to digitization. If you think of the more traditional model around kind of asset insurance, we've seen that claims assessors now actually don't want to digitize because it reduces their ability to basically give backhanders from the claims management companies, which are outsourced. So again, whilst you're seeing the opportunity to use digital around mobile claims assessment models for the assets, as well as basically making it easy, there is still kind of pressures from the industry to try and resist against that change.
No, thanks so much, Jeremy. I think you make some really good points there. And I think it also goes back to the point that Sarah made earlier about the mindset shift that insurers will have to make in terms of digitizing both the sales and claims processing. So great to hear that. Richard, my last question for you, and hopefully we'll have time for a few questions from the audience, is in very exciting news, MicroInsure has recently joined forces with Tonka BI and STP Risk to create the microinsurance company. I'm quite interested, and I'm sure many people in this webinar are also interested to hear why you decided to evolve MicroInsure to become a full stack microinsurer, and what are your plans for Sub-Saharan Africa?
Sure, thanks. Well, I mean, it was something that I started to work on a number of years ago. Became clear to me, I mean, I've been doing this nearly for 20 years as microinsurer, that actually, just being this insurtech that sat between, say, a mobile phone company and an insurance company has its limitations. It's definitely something that's needed, but that actually, for example, there's a limitation on what you can do. You're limited by what product you could convince a traditional insurance company to give you. You're limited by what kind of customer journey you could offer, because maybe the insurance company doesn't agree with you, right? So for me, I've always had this dream that actually to be truly successful and do all that we could do, we needed to become an insurance company. And so trying to find the right partner, we tried to do this with some of the bigger insurers, and found it really difficult to get the bigger insurers to kind of move away from all the kind of controls that are kind of inherent in a big insurance company. And allowing us to do what we wanted to do was just going to be a massive challenge. So SDP is at the other end. It's a very small insurance company based in Anguilla, but it's an insurance company that likes to say yes. So, you know, in sub-Saharan Africa, I mean, we're talking to a lot of different organizations now. I've had, you know, a number of organizations today, even one with a group in Zimbabwe who wants to do crop insurance, another with organizations who want to do professional indemnity insurance for personal trainers in South Africa for 30-minute slots, you know. So so here we go. You know, we as micro insurance company can actually work in any country as a reinsurer. So we just find a local insurance company who will issue the policy, and then we reinsure the risk. And we use our IT and our product knowledge and all the things that we've developed over the last 20 years, and we can get to market really quickly. We've launched already. We only announced it on the 1st of July. We've already launched in 2 new countries and with about 4 new partnerships, which we couldn't work with previous as a microinsurer and in working with the traditional insurance company. So I'm really excited by it. And if people are looking for a partner, an insurance company who is interested in finding a way to say yes rather than finding an excuse to say no, then give me a call.
It sounds like you're going to be really busy, Richard.
I've been so far, yeah.
That's fantastic to hear. I think I'm going to I realize we're a little bit over time, so I realize people will drop off as they need to, so feel free to. But the last question, which I think is a great one, was that someone asked, Robin Butler asked, the discussion today is mostly around personal insurance. Do you believe there's an opportunity for SME-focused business insurance on the same technology and partnerships that have been so successful for personal insurance? So Rashida and Jeremy, I don't know if you guys want to just, in 30 seconds, the best you can, answer this question.
30 seconds, yes, definitely. But, you know, the SMEs want simpler. They still need the technical complications covered as well, but they want simpler, bundled. And you can use similar platforms as well, even through some of their bundled plans with the MNOs. That's also another option that can be explored.
Yeah, absolutely. I mean, if you look at kind of some of the banks and mobile money, even if they have basically personal accounts, often they're actually, if you look at the activity, they are actually businesses themselves. So certainly there's a strong opportunity to leverage your existing distribution models, you know, alternative distribution models to be able to offer a range of products that address their needs. And often SMEs have, you know, a broad range of needs from asset and kind of health and life risks as well. So if you can address kind of bundled products that address those needs, there's a real opportunity. And of course, they make up such a large part of the markets in markets in the countries we operate.
Mm-hmm. No, some very good points. I think, Lisha, maybe you can go to the last slide. So unfortunately, my management with time did not give us the ability to ask what the insurers and insurtechs what type of advice they would give to each other. So maybe we can tackle that in a different webinar at another time. But Lisha, next slide. I just wanted to thank all of the participants and the panelists for joining the session. It was really, really insightful, and it's great to hear about how both the insurtechs and insurers are working to digitize aspects of the sales and claims process. And I think it's also really fantastic to hear the reflections on what some of the challenges have been, because it's not always so simple, but it is possible. And you guys have proven that. So thanks so much for taking the time to join us for this webinar. I just want to thank you. And then the last thing that I want to introduce is that we'll have the 5th webinar in our series of webinars on September 3rd. And this will cover the topic, a bit of a contentious topic about reinsurance and COVID-19. So we'll make sure that all of you guys have the invite for that and hope to see you there. But thanks so much, everyone, and have a lovely Thursday.
Thank
Bye.
you.
Thank you. Take
Thanks
care.
all. Take care.
Thank you.
Bye.
Stay safe.